All right. Good morning, ladies and gentlemen. Welcome back to another ShareWise webinar. The second we've done with KSL, Kina Securities. So I'm looking forward to hearing a little bit more about what Greg and Johnson have to say today. They've had a couple of announcements recently. They've got some key points that they want to talk about. But my name's Harry McCaskill, one of the senior advisors here at ShareWise. And I want to welcome Greg Pawson, the Managing Director and CEO of Kina Securities, and Johnson Kalo, the CFO and Company Secretary. So I'll let the gentleman take it away, but thank you for taking a little bit of time out of your busy schedule, gentlemen, to do a bit of a presentation for everyone watching.
Great, thanks, Harry, and good morning, everyone. Thanks for joining us. We really appreciate it. The webcast is really about our first half 2024 results announcement. As usual, I'll take it that most of you have had an opportunity to read the ASX announcement, particularly the 4D, which always for us is very detailed and comprehensive. And there's also an investor presentation pack that was uploaded with that, and you can access that on the investor page on our website as well. But look, it's a really good narrative for the first half and a continued story of consistent, steady growth. The most pleasing aspect for us, though, is revenue was up 17%, half on half. It's the strongest revenue result, half on half, that we've had in the history of the company. And I think it reflects the execution and success of our diversification strategy, with all of the 6 key drivers of revenue actually on or above budget. And these include net interest income from our loans and deposits, investments, which are largely in government securities and treasury bills here in PNG. Also, our FX, our digital fee income, Kina Investment and Superannuation Services, which is the funds administration business, and Kina Funds Management, our licensed investment management business as well. Specific call-outs that I think of maximum interest. Obviously, interest on loans was up 16%, half on half. Digital up 35%, half on half. And FX, a remarkable increase of 71%, half on half. And these results, again, a reflection of solid loan drawdown activity, close to 400 million in the first 6 months of this year, which augurs well for the second half, primarily home lending and SME, and increasingly more activity coming from the expansion we did last year of our business banking team into the key regional provincial locations across the country. Overall, market system growth, as published by the central bank for the first half this year, was relatively flat at 3%. So it was a really pleasing and good result for us. Digital continues to go from strength to strength, and with the deployment of another 1,000 POS terminals over the second half, we're anticipating that growth run rate to continue. The increased FX flow, again, a really pleasing outcome, and a reflection of 2 years of hard work connecting with the export sectors, especially the resource multinationals in the agri sector. Last year, we onboarded over 30 corporates over the course of 2023, and we're starting to see some increased flows from the state-owned entities as well. The central bank, the Bank of Papua New Guinea, has been deliberately providing more USD market interventions under the guise of the International Monetary Fund, and we've been a major beneficiary of that activity, given that we're now the second largest retail bank in the country. We're expecting that trend to continue over the second half. It certainly has through July and August. And our less capital-intensive non-interest revenue lines now contribute 50% of our total revenue, which is a terrific result. Excluding the extraordinary item we disclosed in June relating to the customer fraud, which I'll talk a little bit more about shortly, OPEX was up 27%, so higher than revenue, and primarily due to higher administration and employee costs incurred in the first half. This is largely seasonal for those that you follow who have followed us historically, and is a similar trend to previous years. These front-ended costs include our employee bonus scheme, which lands in April, training and development expenses, ICT-related vendor and software costs, some strengthening of our core infrastructure and cybersecurity were the major contributing factors, together with a 6% depreciation of the cross rate between the Kina and the US dollar. Most of our software licensing and IT expenses are incurred in US dollars, and they hit us in that first half of the year. So we expect that to normalise over the balance of 2024. This obviously had a negative impact on our cost to income, which came in underlying at 58%, slightly higher than the first half of 2023. We're not concerned about that. We're confident it'll normalise for the remainder of the year, and we're targeting a cost to income range of around 50 to 52 basis points or better for the full year, and that will come from continuing growth in revenue, and as I said, containing our operating expenses so that they normalise over the balance of the year. Our net interest margin, it's holding firm at overall 5.6%, carving out the loan book, a slight improvement to 7.2%, and we're actually in the process of increasing our indicator lending rate by 25 basis points due to a deliberate tightening of monetary policy by the central bank here in PNG, and once again under the guise of the International Monetary Fund. The tightening really is an attempt to mop up some of the excess domestic liquidity. Now the government's raising more of its fiscal budget by funding onshore. So wholesale deposit rates have moved up slightly, but fortunately not at the expense of our net interest margin. The upside for the remainder of the year on government securities and treasury bills is looking really good. The yields on those have increased markedly from around 3% at the beginning of this year to circa 7% for one-year bonds. So as our existing portfolio matures, they'll be going into higher yield investment rates. And again, as I mentioned, it's primarily due to the PNG Treasury deliberately raising more of its funding onshore as opposed to offshore. Overall deposits for us were up 8%, half on half, and not a great deal of pricing pressure coming through. And I think we remain envy of the Australian Bank still being very flush with liquidity. Our deposit to loan ratio is sitting at around 150%. So in summarising all of that, our underlying impact result was up 7% to just under 50 million Kina, and statutory down 9% to 42.2 million Kina, impacted by the non-lending loss provision of 7.4 million Kina after tax, which we disclosed earlier in June. Our underlying ROE still very strong at 15.6%, and statutory ROE at 13%. We expect both of those to improve over the course of the second half, and our earnings per share 5.5 cents and dividend per share of 4 cents was announced as part of the half-year result. So a couple of important items that we have disclosed, but I just would like to give you an update on. Firstly, the corporate tax rate for the banking sector was increased here in PNG in 2023 from 30 to 45%. At the time, it was positioned as a short-term budget fix, but as we expected, it rolled into the 2024 financial year. However, some positive signs there. At the request of the PNG government and Treasury, the PNG Bankers Association was asked to commission a report on the economic impact and seek a repeal of that higher tax rate. That report's now complete. It was done by KPMG. So we'll be engaging in some pretty intense stakeholder engagement over the next 4 to 6 weeks with a view to have that higher tax rate repealed. The upside here, of course, is that the tax rate's not going to go up, but it's more likely to come down. And even if that's progressive over a period of time, it would be a much better benefit for us moving forward. The second item is in relation to the customer fraud that we announced in mid-June. And I do want to reiterate that it was an unfortunate but isolated incident involving a very small group of customers. And while the loss provision we took was 13.5 million Kina, that was recognised as a worst case scenario, and recovery action is well underway. This will come from insurance. We are insured for these types of events, potential third-party liability, and of course the perpetrators themselves. These are well advanced with the proceedings. Our insurance claim has been lodged. And it is important, I think, also to note that there was no exposure to our core infrastructure, and the event was not at all cyber related. So look, regardless of these two factors, our forecast guidance is really solid, and we're excited about our continued prospects for the year ahead. We have some significant tech enhancements set to launch over the second half, including DigiBanker, our retail new account onboarding app. 40% of our new customer accounts for the first half of this year were successfully onboarded digitally, and we're aiming to lift this to 80% over the next 12 months. We've got a significant upgrade of our mobile banking app to facilitate self-service, the introduction of Kina Digital Wallet, a virtual debit card, which is PNG's solution to Apple and Google Pay. They don't operate in this market. A new market-leading corporate online banking platform in conjunction with our strategic partner IXL, and our Pay Better payments platform, which is PNG's BPay, if you like, which is designed to reach considerably more of the market through digital touchpoints than to those customers that just bank with us. An exchange, another first in market, model on the global payments platforms Revolut and TransferWise. It's a white label independent mobile app for personal remittances. We've also partnered with two of the top local fintechs here in PNG that have been commissioned to assist the digitalisation of government and local authorities. NewPay and SNS Tech, they build the customer experience and e-commerce interface using our internet payment gateway. So we're very excited about that opportunity moving forward. So look, I'll leave it there for now. Thanks, Harry, for the opportunity, and we're more than happy to open up for any questions that you might have.
Thank you, Greg. My pleasure. And like I said, thank you for coming on here, doing a little bit of a breakdown of what's been happening and you know, what the key figures that have been coming out. It is very, very promising. And you know, the share price has seen some very, very positive price action. And that's a result of what's been going on behind the scenes. We do have a couple of questions that have come in. So if anyone that does have any more, just drop them in the Q&A section or in the chat box there, and we can have a bit of a Q&A. But we've got one here from Kevin. What portion of income, Greg, is from non-lending business? You know, has the strong financial foreign exchange result from the first half continued? Has the first foreign exchange result from the first half continued into the second half as well? So
thanks. I think I touched on that. 50% of our income is net interest income from deposits and loans. 50% is from our other businesses, digital, foreign exchange earnings, Kina Investment Superannuation Services, and Kina Funds Management. Those two latter, by the way, are not part of the increased corporate tax rate to the banking sector. It's only the banking business itself, and that represents, I think, Johnson, about 15% of our overall revenue. So we're not getting hit the full 45% tax rate. It's coming in sort of the early, I think, 40% or 42%. And we're actually doing some work around our corporate structure at the moment to try and mitigate more of that impact. And to answer the second question, yes, the trend on our FX earnings is we're averaging sort of around 6 to 7 mil a month at the moment. July and August have been particularly strong, and we're forecasting for that trend to continue. For us, I think I mentioned it, it's been a combination of some pretty hard work put in by our newly formed corporate advisory team and our treasury team or financial markets team, connecting more frequently with the resources sector, the major exporters who provide the FX flow. And also we've made some great inroads in the Eastern Highlands, which is where most of the major coffee growers are as well. That's quite a significant industry here in PNG, and vanilla as well. Actually, we're getting some good export receipts from suppliers in that space as well. And I think I touched on this, but the state-owned enterprises, Kumul Petroleum, Kumul Mining, and also Oktedi and Pogara, we're starting to get some flow from those organisations as well. And that's been a deliberate strategy on the part of the government that those organisations should be supporting more so the two local banks as opposed to the other two Australian banks. So that's played in our favour too.
Yeah, excellent. Well, Greg, I've got another one that's come through as well. We've got one come on, anonymous name, but with the ongoing improvements in the telco space, do you have an accelerator program for fintechs to explore new projects that could potentially prove to be commercially viable and significantly, you know, give you a bit of a positive competitive advantage?
Yeah, absolutely. So we work with a number of local fintechs. I touched on two, SNS Tech and NewPay. They've got a terrific interface, e-commerce interface. NewPay work with the Lands Department here. Obviously, as a bank, we have a lot to do with them. and also the Immigration Department, and they've just won a tender with the Inland Revenue Commission as well. And those organisations use our internet payment gateway, which is, well, quite frankly, I think best in market here in PNG, or regarded as such. So we expect to see some pretty good growth come through from there. We've got quite a large program of work going on within the organisation at the moment to digitalise some of our internal processes, and we're working with an Australian-based fintech called Wealth, WLTH. We actually have a small shareholding in that organisation of about 10%. And they've been up here working with us on digitalising our consumer lending, firstly our personal lending, and moving into the home loan portfolio early in 2025. That in itself will give us a significant competitive advantage, having, you know, an online capability for personal lending that also involves automated credit decisioning end to end, the first of its kind in PNG. So we're expecting to get some pretty good growth. The home loan market here is quite vibrant at the moment. There's a lot of, particularly in the National Capital District where Port Moresby based, a lot of new housing settlements being established, and we've seen some good growth in the first half for home lending, which we expect to continue into the second half. We obviously like home lending; it's less capital intensive, and the portfolio is more long term and much stickier.
Yeah, I think the long term approach definitely provides a little bit of stability as well, right?
Yeah, absolutely.
Now, I've got a question on my end. Would you, obviously, when it comes to government bonds, what is the current yield and outlook on PNG treasuries, and what's the sensitivity of that on Kina's overall earnings to a change in yield?
That's a great question, Harry, for our very competent CEO, so our CFO. Might get John to that.
You'll put your hands down for that one.
Yeah. Hopefully you can see him. We're sort of coming in and out of the screen. But
you move a little bit more forward, it should be able to.
Yeah. Okay. Sorry, thanks. I hope that's a little bit clearer, but don't get faded out too much. No, as we've highlighted in our narrative to the results, half-year results release, the rates have increased over the last 6 months. We were down at about 3% yield for the half-year Treasury bills, which is the most commonly traded and auctioned one, and that's risen up to about 6-7% by the half-year point. We see that, I think, stabilising, if not increasing slightly towards the year end, as the government's sort of strategy to internalise and rely more on domestic debt to finance its budget, in consultation with the IMF program that's in place at the moment for monetary policy and foreign currency management. So yeah, we think we're confident that the revenues from our non-lending assets will continue to be will be boosted by the trend in those rates and yields.
Excellent, I appreciate that. And I guess for those who didn't watch the last webinar with Kina Securities, what is the outlook in terms of key milestones in the next 6 to 12 months, not only financially for the business, obviously, but key little strategies and plans that you want to be just ticking off along the way to see a little bit more positive price action for those shareholders?
All right. Yeah, I think there's a couple I'll speak, I suppose, from a financial management perspective, and then Greg can highlight a few of the more strategic aspects of it. But cost control is definitely one. We will be focusing very strongly on that to get ourselves back into that mid to low 50% territory. We touched on our digital and internal digitization projects, for example, in our lending, home lending and personal lending space, and we're hoping that we can extend those activities across other operations in the business and achieve our cost efficiencies through that, or operational efficiencies through that. We think capital is an issue from a financial point, supporting our asset growth is paramount, obviously. So being capitally adequate is always a key area of focus. We're working currently on looking at a tier 2 capital raising in the local market, first of its kind in the market. It'll be, the plan is it'll be a listed instrument, and so we're looking to support our asset-based and capital-intensive activities in that manner. And of course, we continue to look at our non-interest income area as well. So those transactional fees, the building out of the digital capabilities, our FX continuation over the next 6 to 12 months will also be a key area of focus.
Excellent. Lots to look forward to. Thanks, Johnson.
Thank you.
And then, Greg, I guess more with the strategic side of the business. Again, for those who didn't hear last time we had a conversation, what would you say the next little key milestones are that you want to tick off the bucket list?
Oh, look, I think we have a really good strategy that's actually in the investor pack. We call it a bank to market maker model. The transition from where we've come from as a traditional bank through this whole digitalization process and expanding our market reach in PNG beyond the Kina Bank brand with other white label solutions. We're the only bank that has a strategic partnership with the major superannuation funds here through our funds administration business, which essentially gives us access to data on every Papua New Guinean that's working, that's on PAYG, because superannuation, similar to Australia, is compulsory in PNG, and also every employer. So, we're working very closely with those funds on white label, transactional and home lending products that will support the growth of their membership bases, which they're very excited about, and we are as well. It'll just enable us to further take advantage of that organic growth opportunity that we have here. Because, I think I covered this in the last webinar that I had with SharePoint, but, we're in a pretty enviable position, actually, because you've got one dominant bank in BSP with about a 65% market share, banker to the sovereign. I would say kind of to a certain extent in terms of their strategy, they need to be thinking beyond PNG. So this isn't a challenger market for them as it is for us. Then you've got us. We've come from nowhere, really, from 2% market share in 2015, acquiring ANZ in 2018, which took us to 11. We're now hovering around sort of the 16, 17% mark. So that gap, and by the way, with little competition, because the Australian bank, ANZ is a corporate bank. They've got about 500 corporate customers. That's in line with their broader sort of Pacific Southeast Asia strategy. And Westpac, as the people watching would know, I'm sure, have attempted to sell their businesses here on 2 or 3 occasions. So they're still, not really a major competitor for us. So the market opportunity, particularly in the SME and mid to large size corporate segments of the market, is our sweet spot, and that's where we're seeing the growth. And some further sort of refinement around our SME lending. We're exploring green financing, which is subject to a lot of development aid funding here at the moment. So it's sort of money for jam, if you like. And we're also developing some agri finance policies and products as well, because no bank here really in PNG is focused on that sector, and it is a growing sector, and it's a big focus of the government. The Prime Minister talks all the time about PNG being the food bowl for Asia. So I think we want to be part of that growth story as well. So they're probably the major strategic bits. And then, the economic forecast for PNG is quite positive this year. I think it's about 5% GDP growth, which is considerably better than Australia, and a lot of the other developed nations as well. And with these major resource projects, which are commonly known, the Papua LNG, that's ExxonMobil, Total, Santos, that's close to a $15 billion US project set to commence construction late in 2025, early 2026. and you've got a proliferation of 4 or 5 other major projects as well. Wafi-Golpu, the gold mine, that's Harmony Gold and Newmont joint venture, that's set to kick off at some point over the course of 2025.
Yeah.
Then a few others as well. I think the total development pool is about $35 billion US. I mean, that's significant for PNG.
Yeah, that's huge.
And that's going to fuel a lot of GDP growth moving forward. And we're just positioning ourselves to ride the wave.
Yeah. It is all about that timing and the opportunity and trying to make sure that trying to align the stars, as you could say.
Absolutely. Yeah.
Well, Greg and Johnson, I appreciate your time, and it's been a pleasure. And I think there's been so many new things to come about since we last spoke, which is really, really promising, and it is exciting. So I'll be continuing to watch the journey, and hopefully see that share price continue to tick up for those shareholders watching. But is there any last words you want to put out there to anyone watching before we call it a day?
No. Look, thank you for the opportunity, Harry. We've got a good relationship with you guys, and appreciate the support that you provide.
No, more than welcome. I'm looking forward to more webinars to come. But everyone watching, it is recorded, so if you did miss anything, be sure to jump on our YouTube channel just to double check over anything that you did miss. I'm sure Greg and Johnson will put this on their socials as it is recorded. So be sure to stay in touch with ShareWise if you have any questions. I'm more than happy to have a conversation with anyone. But again, another ShareWise webinar, and stay tuned for the next.
Okay. Thanks, everyone.
Thank you very much.